your CPA firm was acquired by another firm, you definitely want to have a conversation or meeting as soon as possible to see what's going to change, who are you going to be working with, technology is going to change, staff's going to change, partners are going to change. Find out how it's going to work so you can see, do you want to maybe stay there and give it a shot, or do you want to start interviewing new potential CPAs? Private equity firms are basically these firms that raise private capital to buy businesses to eventually consolidate them so they can cross-sell services and usually sell that bigger business later on for a big multiple. If your accountant was purchased by a private equity firm, that means they made that decision to be part of a larger organization. Yes, it probably means a little bit of a windfall or cash for them. They made a financial decision, and now things are going to change. It usually means they're potentially closer to retirement or exiting the industry, but you never know. There could be changes in operations, cost cutting, different regulations or different processes that now have to be followed. It's very possible that your tax return, your tax planning, your situation may not be treated the way it was before it was bought by a private equity firm. So you are now working with a firm that's probably going to be a lot of activity going on, may not have client service in mind. So it may lead to a more complex situation that may or may not be right for you. So if your accountant or CPA firm was bought by private equity, top 3 things to look for is who you're going to work with going forward, what technology do they use, and how much you're going to be charged. You want to ask the question of that CPA, meet the other people in the organization, and try to understand how the operation is going to work. So you just want to be on guard, ask questions, and see who you're going to work with, what technology is going to happen, what services they're going to try to sell you. Are you comfortable in that environment? Because it may not be for you, and you may want to go back to working with a smaller firm that's not owned by private equity. Those are the top 3 things: what your fees are going to be, who you're going to interact with and work with, and is the technology going to stay the same, or are they going to use some other type of software? Those 3 things change the most when firms are bought by PE firms. And by clicking the link below, you'll see a list of the questions we suggest you ask.